If you're watching this video, chances are your strategy sucks. You don't have any consistent payouts. Your win rate is not high and you're not passing your evals. You're not seeing these results that you want to see. So I'm about to tell you everything that I wish I knew before I started implementing strategy. Now, why is it super important to master technicality, to master all this? Of course, psychology is roughly like 70% of trading. But if you don't have a strategy, how are you going to implement both of them? How are you going to have structure? So I'm about to tell you everything that I had my students implement to get them thousands of dollars of payouts. 6K right here in 10 days, by the way. 5K plus in less than 5 months. And 5 months ago, you didn't even know what fair value gap was. 10K payouts, 2K payouts right here, $1,000 payouts, no more $1,000 payouts, 600, 5,000, 10,000 right here in Poland. So these are the things that I want you guys to implement as well to get you these results. So starting off, number one, no strategy has a 100% win rate, right? That's number one. That's the thing that you have to remember. Obviously, you're going to see, your trades not play out exactly how the way you want it to, or they're not going to work, okay? So once you implement that mentality, then number one, you're not going to be eager to take trades. That's number one. You can't force your setups. You have to hop on market open already knowing exactly what you want price to do. And then from there, you just hop on, wait for it to present itself. If it does, then you can take that trade. If not, then that's it, okay? Keep that in mind. So every single time you enter a trade, you need to have the confluence versus confluence mentality. What does that look like? That looks like most of the time, you're going to have more confirmation pointing towards your bias, towards your entry, towards your take profit than against it. And if it does look something like this, then you have more confirmation. Then that's a valid setup. If not, if you have more confirmation saying, no, we're probably not going to hit that trade, then why are you going to enter it in the first place? Remember, you need to take A+ setups that are aligned with your bias, aligned with your drawn liquidity. And if you don't take those setups, then you should not even hop on the market. That's when discernment is a big tool. You need to be able to discern if it's even a valid trading day. If it's not a valid trading day, then of course, hop off the market. There's no need for you to take these setups. Okay, now number two, recently we've been at all-time high. Now we're kind of trailing a little bit lower, which is pretty cool to see because today we had a beautiful setup, which I can also go over. But as I was saying, we used to trade all-time highs. How do you trade all-time highs? You treat it as bullish until proven wrong. Now we're probably gonna get back up to all-time highs. That's just what price does. But this is how you look at it. And this is how you treat pretty much every other trading day, exactly how I do it to get my consistent payouts. So usually price is gonna be right around here. We have two drawn liquidities. Right, let's just say all-time highs and limit lows. Now, we're usually going to have an imbalance right around here, okay? We have a drawn liquidity higher and drawn liquidity lower. So let's just say right here, this is a bearish fair value gap, okay? Let's say we inverse it to the downside, okay? Bullish fair value gap right here, we inverse it, pushing us lower. If we do that, then obviously, I'm going to target this right here. Now, why would I do that? Because we have two all-time highs. Usually we're gonna have an imbalance in the middle. If we respect this bullish for value gap, then of course I'm gonna look for a long, right? Of course, I'm gonna look for something like this. Boom, 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 targeting all-time highs. I'll take a continuation model like that. But usually we're not gonna get that. Sometimes we're just gonna inverse this. And if we do, then of course, I'll take this short right there, targeting this higher time frame for value gap. Maybe I won't target all the way down to London lows. Maybe I'll target this, risk heavier and have it at that. Okay, so that's how you have to treat all-time highs. You are bullish until proven wrong. And so implementing that mentality is going to increase your win rate because you're going to take these continuation models with more conviction. Now, optimizing your strategy. You need to understand market conditions. You need to collect data and actually use it. So it's not just taking screenshots, putting onto Notion and leaving it like that. It's taking screenshots, actually implementing it and writing down, okay, why did we hit my take profit? Why did we not hit my take profit? Why were we so close to hitting my take profit, but we revert? And writing it down on your journal and actually using it during market open. Okay, from there, structure displacement. If we have clear displacement, as I was saying here, if we displace higher, then of course I'm going to take a long towards all-time highs. But if we displace lower, then I'm going to take a short towards this higher time frame imbalance or whatever my drawn liquidity is for the day, okay? Understand risk management. Guys, if we have clear displacement, if we're heading towards our draw, if we're taking a lower RR setup, of course I'm gonna risk heavier because I know at the end of the month, my win rate is going to be high. So why would I de-risk? Okay. Now, of course, if it's a confidence issue, then that's okay. You can de-risk to build up that confidence, or you can collect so much data that it's literally inevitable for you to have confidence in your setup. That's number one. Now, discernment. You need to have a checklist. Guys, I've been trading for roughly 4 years and I still have my trading checklist that tells me everything that I want to look for before, during, and after the charts. That is going to change your game because you're going to hop on and your only job is waiting. It's observing. Remember, you get paid to wait, not to enter trades. Okay. Last one is have a clear drawn liquidity. Now, it can either be external or internal. Recently, I've been trading lower RR, lower ticks, targeting internal, but I'm risking minis. I'm not even risking micros now. I'm risking minis because that's at the point of the game where I'm in. So take a screenshot of that as you will. That is going to secure you these payouts. Now, another thing, this right here is how I typically treat my trades. So we have our main target right here. Let's say price is right here. We create a 15-minute fair value gap right there. Okay. Let's say my main target right here is a 4-hour fair value gap, but then we have external lows, or excuse me, London lows, which is an external magnet for me. Now, usually I'm always going to want to have an external magnet to support my entry, my short right there. But let's just say we have something like this. So at the time, price is right here. This is what I would like to see. Boom. Price having that 15-minute fair value gap. Respect it, displace. Okay. Create a 1-minute fair value gap. Inverse that. Targeting that right there. Okay. So it would look something like this. It would literally look like this right there. So we would have SMT right there. Boom. Respect that 15-minute fair value gap. Inverse on the 1-minute time frame right there. And that would be my entry right there. Targeting this right there. Oh, excuse me. There we go. This would be my target. Now, why would I not target London lows? Because recently when I've been collecting data, I've realized that we don't necessarily like to take out London lows, session lows, things like that. So I would much rather target this, maybe a 1-to-1, risk heavier, because at the end of the month, as I said, my win rate's high. I'm going to be good. It's building up that confidence, building up that discernment, and realizing when you should be willing to take these setups, because these are good setups. They're going to present themselves a lot more frequently than like how I used to trade. I'm going to take maybe 4 trades a week, 3 trades a week, which is solid. That's amazing. And that's how I'm scaling my accounts. Okay. And now if we look at real market examples, here I have my P&Ls, I have everything here. The accounts that I'm trading with, the 0 accounts. Now I'm only trading with 5 premium accounts, which were passed. So now I'm scaling those to hit these 30K months, which is crazy. But as I was saying, this is it right here. Tap into a 15-minute fair value gap, sweep internal highs, create SMT, tap into this 1-minute fair value gap. That's my entry. Stop loss above there, targeting my equal lows. Now I think we had London lows here or whatever it was. Maybe it was data lows right there, which obviously I would not target. I would much rather, as I said, target something way more internal, risk heavier, and let the trade play out. Now another setup right here. Create a 15-minute fair value gap right there, sweep internal lows, create SMT, same exact setups here, create a 1-minute fair value gap. Now originally, the reason why I didn't enter here on this retracement is because I simply hopped on late during market open, which is unfortunate. But I saw that we swept internal lows again, create SMT, inverse this gap, targeting my buy side liquidity. Now I think we had London highs above there, which is solid because as I said, always want to have an external magnet like that, but I want to target internal. That's just the way I like to trade. Now the last example is the same thing here. I think this right here is a 15-minute order block, so a bearish order block. We have relative equal highs, we sweep those out, sweep internal highs right there, create SMT there, inverse this 1-minute fair value gap. As soon as we retrace back into that, stop loss above there, targeting my relative equal lows. Now in this case, we did end up taking out side liquidity, which I think was again London lows or data lows or something like that. But the reason why I want to target here is just because it's giving me more confirmation. Okay, why would I not want to target this and just risk heavier? So yeah, as I was saying, guys, follow your plan, follow your rules. This is everything that I wish I implemented before trading. Watch this video over and over again, save it. Everything that I'm showing you in this video, I want you to go into the charts, find it yourself, take note, and actually put into practice because this is literally what's going to get you payouts like this. So please, guys, follow your plan, follow your rules, make sure you're making these things work out. Comment down below what other videos you guys want me to post and what videos you guys want to watch. If it's psychology videos, strategy videos, day in the lives, whatever it is. God bless you guys. Take care, and I'll see you guys.